Hello everybody, welcome back. Let's have a look at Bitcoin and we'll have a bit of an overview. So just in a nutshell, I don't think things look, to be honest, all that bad. I'm actually quite enjoying the way that it does look, and preferably we do come back down to test these lower regions. Maybe not the CME gap. We might get a wick into it. Look, we might come down to retest it. Who the hell knows? But so far we have been on a bit of a roll with this for coming up to a couple of weeks worth of pretty much getting exactly calling it, really, we being me, the royal we, but how much of that is just pure luck. So just a bit of a recap from where it all came about is that, first of all, on the 4 hourly, this is where the main signal has been taking place. We got the Chiku span. We basically got an uptrend based on a signal generated on the 4 hourly Ichimoku cloud, so that played out quite well. Then at the weekend, altcoins got exactly the same signal, and they started playing out. And then on the Wednesday live stream that I do, I said I think we should nip some of these in the bud now. I think the party's come to an end. And if we look at this chart here, I mean, the party technically hasn't yet come to an end. We need this cheeky span to touch the price action to tell you to get out. So at the moment, we're about 5 hours away from this actually happening, unless we pump, which it's not impossible, but I think it's unlikely. So it does look like this trend that was generated around this area here is about to come to an end, and that's fine, because we've got the golden cross, and what we'll be looking for is for us to retest these zones. Normally you get a dump into a golden cross just to see if it's actually real or not, and that's what we'd be looking for. And a pullback to those levels could incur a wick down into the CME gap, which is just below the $41,000 zone, and that is not just the CME gap, but that's a historical area of support stroke resistance. So a major area of support built up around here, which is what I thought the overall accumulation zone was going to be. But also we had this area around here. We also had these tops around here, and if we go back even further, just over a year ago, it more or less marked the absolute peak of the initial massive parabolic run at the end of 2020. So there's a lot going on this chart. There's a lot of support below us, despite with everything coming out about the CPI and inflation and rate hikes and things. It's like I've been saying, I think the majority of it's priced in, and the markets often what they do is they price in the worst case scenario. Bitcoin's just one example. You take a look at stocks, a lot of them have actually been hit harder than Bitcoin itself. So when it comes to Bitcoin generally amplifying what traditional markets do, I mean, in a nutshell, I suppose a basic overview is that it does do that, but it's still held up better than some individual stocks. Big top ones, massive cap stocks. So it's not actually the worst thing you've ever seen. And what we've recognised so far is that we've basically suggested that this isn't a bear market, that this has basically all been, essentially it was consolidating, then the virus kicked in over here, then the tapering became more of a serious thing, tapering being rate hikes and stopping the purchasing of bonds and all this lot, and then markets continue to fall as a result of all of that, and it just continued with the prolonged consolidation. This consolidation trend line, is one way of saying, okay, well, we've stopped the majority of that consolidation. We've broken out of the consolidation trend line. What we could be in now is a period of accumulation, right? And that is probably the most likely scenario. And if that is the case, then it would also suggest that the bottom is in, right? The bottom is actually in. That's what this would suggest. So this coming out of this trend line here, being into a period of accumulation, doesn't mean it's going to go way all the way up. It could go down, it could go up, it will go up, it will go down. That's generally how accumulation is. You're kind of buying into an area with a little bit more confidence that we're not continuing to consolidate. Again, that's just a basic overview of what the way that it looks right now. So if you're thinking about the moving averages on the daily right now, so we're above most moving averages. The 200 exponential is the only one that we need to reclaim, and obviously that would be pretty bullish if we did reclaim that. That needs to be the foundation of any uptrend, really, and the building block of one as well. And that's the sort of thing we've got going on the 4 hourly, and the 4 hourly does yield decent moves when you get that kind of moving average spread, and we kind of do have that. But just like any beginning of any uptrend, you do need to retest these areas. You don't need to, but arguably I would much prefer to see a retest of these zones, these moving averages, just to gain a bit more confidence, because sometimes you'll get a golden cross followed by a death cross, then followed by a second golden cross, which is the more important one. With Bitcoin, that's less of a thing. Normally what you get is, we've got our big death cross here that yielded 40% move, and a golden cross over here that yielded a 40% move. But on occasions you do get them, and this is one here. So we've got a death cross followed by a golden cross followed by a death cross, and that was about a 30% move. Most of the time though, when you get these moves, it is the cross that yields the big move. Same with the death cross over here. We had a death cross followed by a golden cross followed by a massive death cross. So occasionally, like I say, you do get double ones, and it's the second one that yields the biggest move. So before taking any long positions or going hard and heavy into crypto, we want to see this get retested first to see if it's real, because if it's not, then we go down, and then we could probably play the second one that comes up. That's often not often the case, but it's a very likely scenario that the second golden cross that takes place on a 4 hourly is the real one. So I'm not going to be going crazy or taking any leverage positions at all on this one, not until we see what this area holds. And I think that this area has a very strong chance of being tested. But given what we saw on the daily, it does look actually quite good when you talk about the moving averages. We have been supported on the to be honest with you, we're above all of them. We haven't even tested the 10 exponential, so on a daily time frame this is still quite good looking. If only we were above the 200, that would be even better. We're looking at no bearish divergence on the higher term time frames, being the daily. So that's looking quite good as well. On the 4 hourly, we did get bearish divergence, and that you could probably argue is playing out at the moment, which is why I do want to see these areas get retested, and I prefer that. I'm happy to sit back and wait. A lot of altcoins have the same setup. A lot of them have got golden crosses, and they're in the midst of what would appear to be a possible reversal. But with the Bitcoin dominance being still dancing around this weekly zone of the 50, it's 50-50 basically. So we're at 42% dominance. It's the 20 weekly and the 21 exponential on the weekly. It's the make or break kind of zone. So if we break out from here, start closing above here, then Bitcoin, whether it goes up or down, altcoins are not the place you want to be. But for the moment, this could still offer. We're Friday at the moment. This could still offer a rejection, and altcoins have another rally. This is very possible. We've seen how strong the center of this Bollinger Band can be on a weekly. Retested it here on the way down, and again here, broke down all the way down, bang here. Okay. Oh, we had a little run up here, bang, bang, bang. Okay, and now we're up here again. So does it mean that we get another little alt rally before the inevitable rise of Bitcoin dominance? Because again, we've got bullish divergence formed on the weekly, pretty much on all time frames here, not so much on the daily at the moment. Just a consistent uptrend with the oscillators there, but all the lower term time frames look good for the Bitcoin dominance. So it would suggest that Bitcoin is probably the better, even if it's just a safer place to be. So, in a nutshell, Bitcoin could, have a move up, but I think moving up from here would likely form a rejection, probably at these kind of highs, or maybe even 46,500, and then what we'd probably see at that stage is, as we're moving up, these moving averages also move up with us, similar in this kind of fashion, and then we kind of retest them, at a later date, to confirm their strength or weakness. If we break down from them, maybe this CME gap is something that just stays there, one of those CME gaps that never gets filled. Because I know people like to talk about CME gaps. I hadn't heard about them for a long time. People haven't really spoken about them because things have been parabolic for so long that CME gaps essentially hadn't. There's so many of them that haven't been filled, trust me. There's even ones down, the 4,000, 5,000 area from the March dump in 2020. So we can't hold our absolute weight on the CME gap, but it is there and it's not too far away. So a retest of that again would still be kind of bullish. So whether we go down first and then bounce from that, we go up first and then down and bounce from that, either way, an accumulation is going to be, if this is what we're in right now, and like I say, we're more likely to be in one now as we're outside of this descending trend line, we're more likely to be in accumulation right now than before, when we were still technically below this. I used to call it the electric fence, didn't I? Because every time we tested it, it was such a bad reaction. Like, whoa, all the way down. Okay, let's come up. Oh my god, massive reaction. Oh god, it's too bad. So we actually broke out of it this time round. So fair play. It's so there is chance. There's a definite change of behaviour. We're outside of that trend line. We've got golden crosses on the 4 hourlies. One thing I did notice, and again, I've been looking at all time frames because there is relevance on this. You can see on the 12 that we came up to the 200 exponential yesterday. That's where we were rejected. So there is relevance to look on all these time frames. 3 days, something I don't normally look at, but there is divergence on the MACD taking place. I think there's a positive cross, or has formed yesterday. Yeah, it's getting even stronger today. I mean, it's massively in bearish territory. I mean, this isn't like particularly massively bullish, but it's the divergence that you look for really, and this is what we've got. So we do have divergence. We've got an RSI breakout to the max. We've got plenty of room to move. Same with the money flow index as well. So surprisingly, despite everyone being so bearish, especially with the CPI report that came out yesterday, and the implication, obviously, a lot of inflation will correspond to a larger rate hike. I've been saying that it's almost certainly going to be a 50 basis point rate hike. I've been saying that for ages now, and all markets, I believe, have priced that in, and I think that is the case. I think the markets generally have priced that in, and so what we just really need now is a bit of clarification. Are you going to do the 50 basis points, or are you going to do something else? As soon as we know, then at least we can start to trade, because you can see that just from those moves yesterday. We'll just have a look at the hourly just to marvel at its absolute beauty. You can see from all of this is that it's the uncertainty which is making this particularly crazy, and which is what everybody's so flustered about, right? So we go all the way down, all the way up, and all the way down. I knew that there was likely to be a move up before a move down. I didn't think there was going to be a move down before a move up and then a move down. I did think that what we were going to see is basically a breakout and then a move down. That was my expectation. But this and this and this, that was amusing. But yeah, I mean, like I said, I do feel like I've been on a bit of a roll. Whether that's just pure luck, I don't know, but I'm quite comfortable with playing the chart now how it is, but the major component that's outside of this chart is, are we going to get 50 basis points? If we are, I don't think there's going to be that much more. I don't think it's going to ripple the markets an enormous amount. If anything, it's the certainty, it's the clarification that's going to help everything. At the moment, it's the uncertainty which is causing, well, the lack of trading really, or the messiness of trading, or the just general downside of trading is not helping with the market. It's the certainty, the clarification, which is going to help, even if it's 50 basis points or whatever. We just need to know, and as soon as we know, then the markets will go, okay, we have priced that in, or maybe we've not, or maybe it's better than we expected, and we go straight up. Either way, we just need to get that actual announcement from the Fed. That's what we need, and my expectation is it is going to be a 50 basis point, because the main thing that they've got to deal with is the inflation, and you can't argue with that. It's got to be done. It has to be done. It's got massive repercussions for not just Americans but internationally. It's a big deal. So sort the inflation out. Give us 50 basis points. Let's start this situation. Let's get it sorted. To be honest with you, I think it'll get resolved faster than people expect. Don't think it's going to lead into a massive recession or a depression or anything like that. When I was looking at the UK stats, they've already gone for 50 basis points, and the economy, the GDP is up 7.5%, so far. So I mean, let's just get it sorted. It'll be a painful few months, maybe a painful 6 months. Majority of the year coming into the third, fourth quarter, probably close to being resolved, to be honest with you. I know that sounds a bit optimistic, but I think the majority of the pain is had. I think we're at peak inflation now, and everything from now will just be tailing off, and it'll be a bit top heavy for stocks, commodities, crypto, possibly. But the end of the day is that the sooner you get it sorted, the sooner we can it'll recover in all kinds of ways. Get out of the hole of inflation that's been dug, globally. Well, at least for obviously America, because it's the American it's the American markets which matter, unfortunately. But I mean, if the UK is anything to go by, I'm not saying the UK is like the pillar of hope or anything, but I agree with how they're doing it. The economy is rebounding, and you might as well just bang up, sort those inflation, sort it out, all right, sort it out, because I couldn't care less if we continue go down to lower levels than this. I'm pretty confident that this entire chart will recover, but our currency, if it goes into hyperinflation, that's a much bigger deal that impacts a lot more people than just me and Bitcoin. So get it sorted, and I'm pretty sure they will. And I'll be, like I say, I'm pretty optimistic about how fast it'll turn around with the inflation. All that means is that we'll just have a top heavy chart. Look, at the end of the day, when we just bring it back to the TA for a second, the TA has actually been relevant so far. The chart has played signals. The chart is tradable. So regardless of the inflation report or whatever comes next, we can actually look at this chart and go, actually, yeah, it's actually okay. It is actually a good looking chart. People are calling for bear markets still and lower prices and things, but surprisingly, this chart is really quite good. This is what you want to see. We just want to see some bullish retests of these lower prices. Not even prices; they're just moving averages. But there are many signs on this to suggest that it's not the end, and in fact, if anything, the low is in. So I'm going to use that as clickbait, and I'll get some hate for it, because normally people just look at the clickbait and then they just start leaving nasty comments. But feel free to leave any comment you like. It helps the algorithm, even if you're just calling me a twat. So just say whatever you want. Say whatever you want. There's a lot of competitors out there that just basically just say anything. At least what I'm saying is my own trading strategies that are based upon things that I'm trying to explain. But yeah, I'll leave it with you there, guys. Well, thanks for watching anyway. Hope you have a nice day. Take it easy.